The U.S. markets are closed for the weekend, and as of the final bell on Friday, November 7, 2025, Metsera Inc. closed the regular session at $83.18. That was a strong day, up a solid 2.00%, but that is absolutely not the real story. The real story, the one that has every professional trader at their desk tonight, is what happened after the bell. In after-hours trading, the stock ignited, soaring 7.00% or $5.82 to land at $89. That 7% after-hours explosion is the sound of a bidding war going nuclear. The market has just received a signal that Metsera is no longer a science project. It's the single most valuable, non-negotiable prize in the entire biopharma industry, and the price tag just went up. The common expectation, the narrative you'll hear from many doing their online investing, is that Metsera is just a lucky one-trick pony biotech. It's a small pre-revenue company that stumbled onto a promising molecule in the red-hot obesity market. The belief is that Metsera is just a pawn, a small chip being fought over by two desperate giants, Pfizer and Novo Nordisk. People on the Robinhood app are looking at this as a simple gamble, an M&A arbitrage play, where you just bet on which of the two bids gets approved. They see the $83.18 price and the $89 after-hours pop as just volatility. But here is the reality, and it's what that 7% spike is screaming. Metsera is not the pawn, it is the kingmaker. That $89 price is the market waking up to the fact that this is no longer a two-horse race. The 7% pop is not random. It's a direct reaction to late-breaking rumors, first reported by financial newswires around 4:30 p.m., that a third pharmaceutical titan, likely Eli Lilly or Merck, is preparing to enter the fray. This rumor, true or not, has fundamentally altered the entire investment. It means the $9 billion hostile bid from Novo Nordisk is no longer the ceiling, it's the new floor. The expectation was that this was a simple choice between two offers. The reality is that this is now an all-out, no-holds-barred war for an asset that could define the next 2 decades of medicine, and the company's board knows it. Let's rewind and understand the battlefield, because this is what traders on Interactive Brokers are analyzing right now. First, Pfizer, facing a massive patent cliff and desperate for a new growth story, identified Metsera's pipeline. They struck a friendly $4.9 billion deal, which the market initially liked. But then the 800-pound gorilla, Novo Nordisk, the maker of Wegovy, saw this as an existential threat. They could not let a competitor, especially one partnered with Pfizer, get its hands on Metsera's technology. So Novo launched a hostile, unsolicited $9 billion all-cash bid to snatch the company away. In response, Pfizer, the original suitor, didn't raise its bid. It filed lawsuits, claiming Novo's move was a blatant antitrust violation designed to kill a competitor. This is where it gets critical. Just this past week, Metsera's own board of directors, looking at both offers, officially deemed Pfizer's $4.9 billion bid inferior to Novo's $9 billion bid. This was a clear signal to shareholders. They want the higher price, and they are willing to fight for it. This is the kind of high-stakes corporate drama that makes or breaks Fidelity Wealth Management portfolios. The market was stuck, trading in a range, trying to figure out if Pfizer's antitrust lawsuit would block the Novo bid. But this new rumor of a third bidder changes everything. It suggests a major competitor, like Eli Lilly, has decided it's more dangerous to let either Pfizer or Novo win than it is to just buy the asset themselves. That 7% after-hours jump to $89 is the market pricing in this new three-way war. This is no longer a stock for a set-it-and-forget-it Schwab Intelligent Portfolios account. This is active, high-stakes M&A warfare. So why? Why is this one small company worth $9 billion, or maybe even $10 or $12 billion? Why is it causing more drama than Tesla stock on an earnings call? The answer is in the science. The expectation is that Metsera just has another weight loss drug. The reality is that Metsera's pipeline may make the current blockbusters, Wegovy and Zepbound, look like first-generation technology. Novo's Wegovy is a single agonist, GLP. Eli Lilly's Zepbound, which was a huge leap forward, is a dual agonist, GIP-GLP. But Metsera's lead candidate, which we'll call MET-102, is a tri-agonist. It targets GLP, GIP, and also glucagon. The early phase 2 data that has all these companies in a frenzy is staggering. It's not just about the amount of weight loss, which is rumored to be north of 28% in trials, but the quality of it. The data reportedly shows superior preservation of lean muscle mass, which is a huge problem with current drugs. Even more, it's showing significant positive impacts on liver health and cardiovascular markers. Metsera isn't just selling a vanity drug, it's selling a potential cure for metabolic syndrome. It's a drug that doesn't just make you thinner, it makes you healthier. This is why the investment help you'll get from a serious analyst is that this isn't just a drug, it's a multi-generation franchise. It's an asset that could obsolete the current $100 billion market, and that's why everyone is willing to pay anything to get it. For anyone doing self-investing, the implications are stark. This is a binary event. The volume on the stock isn't coming from SoFi active investing accounts. It's coming from the biggest hedge funds and institutional desks at Fidelity Investments. They are building massive positions. They are not buying the stock like they buy Apple stock for its ecosystem or Nvidia stock for its long-term AI growth. They are buying this for one reason, an all-cash buyout at a significant premium to the current price. They see $89 not as expensive, but as a discount to a $110 or $120 final bid. The Fidelity mobile app and Robinhood stock trading platforms are likely lighting up with alerts, as retail investors are now chasing the smart money higher. Here's a question for everyone watching, and this is the multi-billion-dollar question. Who do you think the third bidder is? Comment below. Is it Eli Lilly trying to corner the market? Is it Merck trying to buy its way in? Or is it a dark horse like Roche? And what is your final buyout price target? Looking forward, the outlook is now a high-speed, high-risk game. There are three clear scenarios. Scenario 1, the bull case. The rumor is true. A third bidder, let's say Eli Lilly, enters with a $10.5 billion, $100 per share all-cash offer. This forces Novo Nordisk's hand, who must bid $11.5 billion to protect its empire. Pfizer, seeing its future evaporate, makes a Hail Mary $12 billion bid, and the company is finally sold for a massive premium. Everyone who bought at $89 on Friday night celebrates. This is what the M&A arbitrage funds on the Fidelity trading platform are betting on. Scenario 2, this is the one that could wipe out accounts. The rumor of a third bidder is false. It was a plant by an activist fund to goose the stock. At the same time, Pfizer's antitrust lawsuit against Novo Nordisk succeeds. A judge grants an injunction blocking Novo's $9 billion bid. This leaves Pfizer as the only suitor, and their inferior $4.9 billion bid is the only one on the table. Metsera's board, with no other options, is forced to renegotiate from a position of weakness. The deal collapses or is repriced dramatically lower. The stock would fall from $89 back to $50 or even $40 in a single session. This is the risk that keeps this stock out of Fidelity ETFs and Fidelity mutual funds. Scenario 3, the middle ground. The third bidder rumor is a bluff, but it works. It spooks Pfizer. Pfizer, realizing its antitrust lawsuit is a long shot, drops the suit and comes to the table with a much higher bid of $10 billion. Novo Nordisk, facing real antitrust scrutiny, decides to fold and walk away. Metsera's board accepts the $10 billion offer, and the deal closes around $95 to $97 per share. This would be a small win for those buying at $89, but a safe and clean exit. So, to summarize what we're seeing, the expectation is that Metsera is just a small-cap biotech stock in the middle of a takeover. The reality is that this is the single most important strategic asset in the pharmaceutical industry. That 7% after-hours pop to $89 is the starting pistol for the real bidding war. The market is finally understanding that Metsera is the one holding all the cards. The $9 billion offer isn't the end of the story. It's just the end of the beginning. Disclaimer: this content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. If you found this helpful, don't forget to like, comment, and share. Stay smart with your money.